I'm sure that many have heard about market structure, and as a smart money trader or SMC trader, they will say market structure is more important, right? Market structure, because it is the market structure that basically, to me, it is market structure that will give you who is that? It is the market structure that will give you the idea of the whole price direction. This is your last one, whoever. So it's market structure that will give you the whole direction, that will give you price direction. Now, my market structure is more about you understanding what market is trying to do, what market is doing, and maybe probably what market has done before. So it is just about asking yourself where is market coming from, where is market now, and where is market going to. Now, I'm going to explain market structure in the way you can understand. There are basically three types of market structure. Three types. The thing there is that when it comes to Forex trading, there are two things that the market will either do. The market will either buy or sell. That's just it, because that is why it is called trading. It's either you go to market to buy something or you go to market to sell something. So altogether, we are all traders. Now, it's either the market buy or sell. So that is why we have bullish market, bearish market. The bullish market is same thing as uptrend. That is, price is going to the upside. The bearish market is same thing as downtrend. That is, price is going to the downside. So we have uptrend, and then bearish market, we have downtrend. Now, I've said that other market will do these two things. Now, in some cases, we have what is called the ranging market, or probably some people call it the consolidating market. Now, even as a ranging market or consolidating market, inside of this, the market is still buying or selling. I mean, inside of your ranging market or consolidation market, the market is still buying or selling, right? So now, I'm sure that you have seen something like this, probably maybe from somewhere. You have seen where market is moving to the upside. This is an example of a bullish market. This market is going to the upside. Now, example of a bearish market is when market is moving to the downside. Now, I'm going to explain how this works in the real sense. When markets push to the upside, in a bullish trend, we create what is called higher highs and higher low. All right, we create what is called higher high and higher low. And in a bearish market, we create what is called lower high and lower low. Now, this is a bullish market where price is creating higher high, higher low. This is a bearish market where price is creating lower high, lower low. Now, in a bullish market, the market will always break the previous high, right? When market is bullish, this shows that the people buying, I mean, this market is basically bullish because the people buying are more than the people selling. So this sell is just a retracement. And the reason why, there is going to be a retracement, definitely. I've said it before that market moves in wave. You have to understand this, that the market will not just go like this. If something wants to move from, for instance, let me use BTC. When BTC dropped down to like 40K, when BTC moved from 40K to 99K, did BTC move like this? Absolutely no. We move in wave because the same time people are buying, pushing the market to the upside. At the same time, when people are buying, there are some people taking profit. In that process, they are selling, leading to a retracement. So we push, we retrace back, we pushed. Now, the next push has to break the previous high, which shows that the market is bullish, which shows that the people buying here are basically more than the people selling here. So we have a push, a pullback. So this short sell, they are called the pullback. This main buy here is called the impulsive move, which shows that the market is bullish. This pullback here is, this short sell is called the pullback. So in a bullish market, the previous low is always protected. This low, they are protected. This previous low, they are protected. This previous low, they are protected. Why the previous high should be broken, right? This previous high should be broken. This previous high should be broken, leading to a break of structure, right? Leading to a break of structure. So we have higher high, higher low, then higher low, so on and so forth. So we have markets move like this. We have to pull back a little bit, push, pull back a little bit, push. That is how market move. That is why sometimes when you get to miss a trade from the bottom, that is not the end of it. You have to develop this mindset that if price is going to move from A to B, you have to understand that price will not just move in one line. So even though you are not able to get into this bullish move from the bottom, by the time you keep following structure and putting other things together, you can get into the market from here, and even from here. So just that when you understand that the market is bullish, so you want to buy, you don't want to sell, you don't want to trade against the trend. Now, same thing for the bearish market. So we have the lower high, the lower low. So in a bearish market, the previous high should be protected. The previous low should be broken, leading to a break of structure. So this is called POS, which means a break of structure. The previous high should be protected. The previous low should be broken, leading to a break of structure. Previous high protected. So we have this as our lower high. We have this as our lower high. We have this as the lower low. And then this as the lower low, right? So this is how the basic market structure is. Basic, right? Like I said, they are just basic thing. You can even when you search, I'm sure most of you guys have come across this, right? Now let's now move to the advanced, right? If this is basic, when they say something is basic, I see it as it is easy to comprehend, it is easy to understand, it is easy to identify. And if this kind of thing is easy to identify, everybody can basically make money from just trading this. If you know that, okay, bullish market, you buy, bullish market, price should not break the previous low, then price should break the previous high. So even though you buy from here, you can decide to put your stop loss here because, oh, bullish market, price should not break this previous low, right? And then you buy here, you put your stop loss here, and then you hold your trade. That is why it is called basic. Now, if everybody is doing this, definitely everybody will be making money. Now, it is not always like this when it comes to the advanced. In the advanced market structure, I want you to start thinking. I don't want you to like see it as this. I want you to think as if you are basically seeing everybody. You are basically seeing what everyone is doing. There is something I always tell my student that thing you are seeing on your chart, you just have to understand that you are not the only one seeing it. At the same time, some people are seeing it, but they are seeing it in maybe another thing. Here is it. You might see this as a break of structure. Now, you might see this as a break of structure, smart money, break of structure, right? But there are people that just see this as support broken, turn resistance, right? Because when you go to the charts, it is not going to look like one line like this. You are going to see a couple of candlesticks. So they see this as support on resistance, right? But you see it as break of structure. Another people somewhere else, they are seeing it as something based on their whole strategy. So that is why I say that thing you are seeing, not only you is seeing it. At the same time, you don't necessarily have to know all the strategy, but the ones you know, you can make money from it, like take advantage of it. So now that is why I will now explain the advanced one. Now, if the market is bullish, you understand that the previous low should not be broken, while the previous high should be broken, leading to a break of structure. The previous low should not be broken, the previous high should be broken. You need to understand that a lot of people will be engaging into this buying. Definitely, there are people buying. That is why price is moving to the upside. People are buying. That's why price is moving to the upside. Now, A lot of people bought from here. Buyers got into the market from here. Another set of buyer into the market from here. Another set of buyer into the market from here. And all of these things joined together, people are buying from here. And if this thing is like this, like I said that, then everybody will be buying from every reversal. I mean, from every pullback, people will buy. And then you don't really have to start stressing yourself, understanding order flow, liquidity. Just with this basic thing, you can trade. Now, if everything looks like this, when it comes to the advance, a lot of times, price is going to push back. Now, there is what is called, in this market structure, we have what is called the internal structure. I'm going to explain internal structure and the external. Now, the internal and the external. Internal, when they say something is internal, it is inside. External, outside. Now, when you want to understand internal and external structure, you need to understand your swing structure. Swing structure. And when you want to understand the external structure, when you want to understand the external structure, you have to understand your swing. Now, the internal structure, you have to understand the pullbacks. The pullbacks. Now, internal, pullbacks, external, your swing. Because if you have because if you have a move from here, if you have a move from here to here, back here, and a push, for price to move from here to here, like I said, that price does not move in straight line. We are going to have something like this. Price will still have to pull back. Along that line, we have something like this. Then we have something like this. Now, all of this, they are what? They are the internal structure. So I'm going to use another color for that. Let me use red. You see these red ones? This red structure, they are the internal structure. They are still giving that same thing. They are breaking structure to the upside, breaking structure, protecting the low, breaking structure, protecting the low, breaking structure, protecting the low. They are internal structure. You now see this blue line, they are the external. So they are the external, meaning that everything inside of this blue line, any structure you see, they are internal, right? You understand what I'm trying to say? So this blue line, they are the external, which means that they are the swing. While these red lines, they are the internal, which means that they are the pullbacks happening inside of your swing. So this is what I'm trying to say, that if you don't understand your internal and external, you are going to, at the end of the day, you will not understand when price is just making a pullback or when price is still moving in that direction. In the sense that if this blue is your swing and the red is your internal, which they are your pullbacks, so most time price is going to come like this, push a little bit to the downside, and then continue the buy to the upside. Now, you don't understand market structure. You see this push to the downside, this little push to the downside here, which is just a pullback. It is just a retracement. And then before price will now push, leading to a new break of structure. So this push to the downside here, this does not mean that price has changed structure. Now, let me quickly explain this common word, change of character. Is very common. The first time I heard about this change of character, the whole ideology is that when price change trend or when price change structure. But the thing there is that later I've got to discover, and I'm telling you now that change of character, it is not when price has completely changed trend or when price has completely changed structure. Change of character, it is just a temporary change, something that is temporary. So that's temporary, meaning that this is just giving that kind of pullbacks before the main move. So if you have price move like this, which they are your swing, you are going to have your internal structure. You are going to have your internal structure move this way. Your internal structure will be like this, right? Now, inside of your internal structure, when price got to this swing high, what are we going to have? We need to make a pullback, right? We need to make a pullback. And how will that pullback look like? We have to break the previous low. So we are going to break this previous low from here, and then we continue moving to the downside like this. Now, this break of this previous low is where some people tend to, see it as a change of character. They see it as a change in trend, and they want to start selling. Maybe they think the market has completely changed bearish. Meanwhile, the market has not changed bearish. This is a temporary change in this internal structure. This is just the pullback for both the internal, which is this red line, and even for the swing, which is the blue line. So in the real sense, the market is still bullish. And when markets start buying again, we still have to break the previous high, right? Leading towards another change of character. So before we now start moving to the upside like this, and then we break structure, this is now where the valid break of structure comes in. This is where the valid BOS comes in. You see all these BOS here, they are internal break of structure, not yet valid. The one that is valid is this external, right? Now, if we are going to definitely have a pullback, right? So let me use this blue line again. So we are going to have a pullback again, like this, right? Now that pullback, price is not, which is going to represent the swing. For that pullback to happen, we have to do something like this. We have to create internal structure, right? We have to create internal structure, which they are going to look like this. And then what has happened here? We have more like a change of character, which represents a temporary change in trend. So price is still very much bullish. Why? From what I've explained, that your previous low, in a bullish trend, your previous low should be what? Protected. So price is still bullish here. So if price start buying again, what has happened? Break of structure. These are internal structure. So price will start buying again. And then before price now go and break structure, giving a valid break of structure. This is how the market structure looks like in the real sense, right? It does not look like this. It does not look as like something like this. If the market structure is like this, I've always said it, if the market structure is as straight and as simple as this, it is a trap, because at the end of the day, price will still have to pull back to clear out. Price will still have to pull back to create that pullback, to create that retracement, because this is just price moving in one straight line. This is price moving in one straight line. There is still going to be pullbacks, and the reason for the pullbacks, there are different reasons. There are different reasons why price has to pull back, which we are going to talk about along the line. So this is how the advanced market structure looks like. Now, I'm trying to explain something here, right, before I got here. Now, if this is how the market structure looks like in the real sense, using your internal, your external, your pullback, and your swing. So your blue line, they are the swing. This is your swing line. This is where price makes that sell. This is where price started selling to create that pullback. They are your swing high. This is your swing low. This is where price started buying back again to break structure, which is your swing low. This is your swing low where price started buying. This is your swing high where price made the retracement. Asalaf or Asal, I don't know. Please be careful. This is the second time you are annotating on the chart. All right, so
You worried that guys.
all right, so now let's now move to the last example before we now go to the charts because of the time. So now this is the last one I'm going to explain in the advanced market structure. There are different things, right? There are different things. We have different things when it comes to technical market structure. We have points of interest, we have liquidity, we have order flow, we have range, we have different things. And this is just me trying to explain market structure without having to mix or bring in all of those things so that I don't confuse you. Now, the next one I'm going to explain is something like this. If this market is bullish, you know that the market is bullish. Why? Because price breaks structure. And let me just make it 2 so that it will make sense. Now, Okay, market is bullish. Why? Because price break structure, the previous low is protected, and price break another structure, the previous low is protected. So as what I was trying to explain before, I said that if price is like this, everybody will just be buying and putting their stop loss below the previous low, because they know that bullish markets, the previous low should be protected. Now, in this kind of structure, you don't want to trade something like this, because at the end of the day, if price start pulling back, if price start selling and pull back, this pullback will not only end at this midway. Price is going to pull back to take at least one of those low, right? To take at least one of those low. Those low that price is taking, they are the internal structure. That is what I explain here. That is why I have to explain this. That is what I explain here, which they are going to look like a change of character, but they are not change of character. This is just market taking out internal structure. They are internal structure. It's just like something that happened here. If price move like this, at a point, price is going to pull back to take out at least one of the low. This is it. This is how it's going to do. At least one of those two. Any one of them, price could just take out one or two or three before we started buying. So price is going to come to take out at least one of the low before we continue buying to the upside. So I'm going to draw it out one last time. Now, if this is your swing, this is the last time I'm going to be drawing this before I now move to the chart. If this is your swing, this is the internal structure. Now, what I'm trying to say is that you see this straight line, it is going to be like this. It is going to be like this. It is going to be like this. All right. Now, if the structure is going to be like this, if the structure is like this, at the point you are going to have that pullback, in the sense that price is going to come to take out one of the low in form of what? Internal structure. This does not mean that price has changed character. Price is going to pull back to take out one of the low in form of internal structure, right? Before we now continue buying to the upside. Before we now continue buying to the upside, our price is still going to move out to take out at least one of the low before we continue buying to the upside. So, and when you now, at the end of the day, when you join all of these things together, you now see what I'm trying to say, that this is your swing high, swing low, swing high, swing low. But you see this break here, they have price taking out internal structure, because for price to move from A to B, price is going to do like this, right? We are going to be having higher highs, higher low, like this. So price will push back to take out one of them before we now continue like this again, before we now break structure. Price is now going to come back again to take one of them before we continue break structure. Now price is still going to come back. Price is still going to, I'm sorry about that. All right, so price is still going to come back again to take out one of them before we now continue to. So now all this break of structure inside, we are still bullish. I mean, we are still to the upside, very much to the upside. So now this is now going to, let's now move to chart example. Let me use common this, like this, even USD. This is a very common pair that people trade. So this is Euro USD, which we are going to identify our structure from here, from what I've taught, basic, advanced, and all of that. So let's quickly do that before in the next 7 minutes. So this is 4-hour time frame on Euro USD. Just like I've said, that when you come to your chart, it's not going to look like what I drew out initially, because these are candlesticks, right? And they are not one or two. It is those candlesticks joined together that will make your swing high and your swing low. So look at this market structure now. We have price move from this place to this place before we printed this high. Now, I just want you to focus on here. I want you to focus on this current one that happened here. Okay? On this current price action that happened here. Sorry. So I want you to focus on this. Now, look at what price did. When we move from here to here, we pull back without taking this previous low. Now, this is the blue line I'm talking about, which is your swing. So I'm going to change it to the blue, which is your swing. They are your swing. Now, the internal I'm talking about, I've said it that for price to move from this one line, we are going to have what? We are going to have this. And I've said it that if price wants to print your swing high, which is that's the red line. I'm explaining the red line now. The red line is this. So price is going to pull back to take out one of the low in form of internal structure. So this one here does not mean we have changed character, right? This is just price selling to take out what? Internal structure. You can see that this low is still protected. This previous low is still protected. This low is protected. Our previous low are protected. Price is breaking structure, previous low protected. Price break structure, previous low protected. Price break structure. This is what I explained in the basic. But in the advanced, it is not going to be as clear as this because you are going to have the mixture of both internal and external, which is your swing and pullbacks. So this blue line is your swing. Price move from A to B to C, D, and E. Now, for all of this to happen, we are going to have internal structure. And there's definitely going to be pullbacks. So price pullback to take out one of the low, right? Before we continue buying. So these are the change of character you are seeing, which in the real sense, this is price just pulling back. And then same thing, don't look at the time frame. Same thing for all time frame. Whatever time frame, it's just like you just have to be able to see the bigger picture when you are trading based on time frame. Let me say you are trading, you are on 4 hour now, and then okay, you understand that price is still very, very much bullish and you want to buy. So you just try to go to lower time frame to see the much more clearer structure from there. So because on the lower time frame, you see from this point here, let me just clear the chart. I don't like. You see, from the lower time frame, from this point here to this point here, all these things that price did is still the same thing when you go to the 1 time frame. So this is the 4 hour time frame. Let me go down to 1 hour time frame. I'll show you. You see that it's still the same thing. It is just the thing there is that you just have to know how to focus more on the bigger picture. Time frame should not confuse you. I've seen when people say time frame confuse me, time frame confuse me. Time frame should not confuse you, right? If the lower time frame is becoming too confusing, then come to higher time frame. You can see the higher the time frame, the lesser the candlestick, the clearer you see the chart. That is how I just try to break this down. So if we move, if we make an impulsive move, in the direction of the market, retracement is the pullback. So if we make this impulsive move, this is the impulsive move from here to here, back to here, break of structure. So this is where the valid break of structure comes in. That is your swing. That is where the valid break of structure comes in. That is your swing structure, right? And then we have pullbacks. We have price pulling back. Price is going to pull back. So that pullback is going to look like this. But you can see that the previous low is still protected, right? The previous low is still protected. Now, this is where time frame tend to confuse people on market structure. Now, when you now go to very, very low time frame, like 5 minutes now, this is where it now becomes, you see, this pullback here, that price move like this, like this, like this. When you go to a much more lower time frame, you see this pullback, all of this thing I drew is just the movement from here to here, I drew out to. But when you go to much more lower time frame, you are still going to be seeing something like this again. Inside of this one, again, inside of your pullback from 4 hour, you will not still be seeing something like this. So that's what I'm trying to tell you now, that don't get confused by this. You should always use that higher time frame as your directional bias, like as your direction. If you understand that the higher time frame is making pullbacks, so tell me, why do you have to start, this little buy? You see, this small buy from year to year now. Why do you have to start, having to trade this small move here without you focusing on this bigger picture here? Right? I'm just basically teaching based on the way I see the market. Everyone with different ways they trade. And for those that know since I've been teaching, I always say that I don't really force people to believe what I believe. This is how I trade the market. And I always tell my students, I even told them today that I don't like to, suffer myself or try to engage in some small I don't see it as something worth risking on. There are some moves that I don't even see it as something worth risking on. It is not about probability. Leave probability, leave high probability, leave low probability out of it. It is just about you seeing the market and understanding the direction, right? So now, if you see this from the higher time frame, that you understand that this is a pullback from the higher time frame, and you go to the lower time frame, you are seeing something like this. Come to the higher time frame, try to break it down, see that bigger picture. Use your, that's why you have, why do you think TradingView put all of these too, all this rectangle, brush, all these things here? Use your text, put it, your high, this is your high, this is the low, this is the high, this is the low. Join them together. When you go to much lower time frame to see the internal structure, because the internal structure might not be clear here, but if I go to like 1 hour or 30 minutes, the internal structure might be clear. Right? Then you go there, you understand that this, if you are trying to sell, you understand that this is the internal structure. This is the pullback. Price is still very much bullish. So all of this, they are no change of character. This is price coming to take out internal structure before the main move. Right? So this is all I have to say about market structure. We are still going to talk about that thing, and we still have a whole day, a full day for the recap. So guys, this will be the end of the class. See you guys tomorrow. I'll still give time for everyone to ask questions when is the right time.